Okay, so I'm just gonna go ahead and pull up the news for this past week. Okay, so for this trade review, it's gonna be from the 13th to the 17th of January. So, no news Monday, red folder news Tuesday through Thursday, and then no news Friday. Cool. So I'm just gonna go ahead and go back to Monday the 13th. Alright, so this is the 12th, this is the 10th, 13th. Cool. So on the daily time frame, we see price has swept the previous daily low and has taken out this swing low too. So for your daily bias, what do you think would be a good direction for the market to move, up or down?
Um,
Down,
yes.
because it's trading inside of this bearish fair value gap on the daily time frame, or why?
Well, it just, I would actually say the next day would be bearish, or I mean bullish, because it just swept the previous week low. It didn't close below it.
Mm-hmm. All right, let's go back
And because it
to.
was in that daily fair value gap, I would expect it to tap into that.
Mm-hmm. So let's just drop back down to when the market's about to open.
This is Monday, yeah.
Yep. Okay. So market opens at 9:30. ICT macros are aligned right here from 10 to 11 o'clock New York time. So if you watch what happens during market open, what does the market do? It dumps, it sweeps sell side liquidity, and
Hmm.
starts to form a breaker block. I think on the 1 minute time frame.
Yeah.
So we have a first initial sweep of sell side liquidity as soon as market opens, and then a couple minutes after at 9:37, market sweeps sell side liquidity again, taking out this low. So these two white candlesticks form a breaker block. All we have to do now is wait for price to retrace back into the breaker block and this overlapping bullish fair value gap, and we get an immediate entry. So these next few candlesticks tag our entry in perfectly. Let's see if there's any drawdown whatsoever. So entry right there, stop loss right below the breaker block, instant take profit at 2-to-1 risk to reward ratio, or we can target these equal highs created during New York session that morning, just because it's already very clean buy side liquidity. So I targeted these equal highs, but I took off 70% of my position right around 2R just to play it safe. So right around here is when I sold most of my position, and then I left everything else for
Running.
equal highs. And then I moved my stop loss to break even, so that way if it went back down, I wouldn't be able to lose any of the money anyway. And just a couple minutes later, it tags TP. And why is this time important? Because it hits our take profit and pumps when? Between 950 to 1010, which is inside of the first hourly macro of the day. So this is a perfect example of time aligning with price or price aligning with time. So very good trade, especially for a Monday with no news. This is awesome. So could just do plus 3R. Okay. Now let's move over to Tuesday. Tuesday, what do we have? Red folder news at 8:30, core PPI, and then normal PPI. So this is fake red folder news. I don't really classify that as real red folder news just because we're probably not going to see anything significant in terms of price action moving. The only real red folder news that I really pay attention to is going to be CPI, FOMC, or NFP. So even though this website claims that core PPI is a red folder news event, I just don't take it as seriously because it just doesn't move the market as much as CPI, NFP, or FOMC would. Does that kind of make sense?
Hmm.
Cool.
Yeah.
Okay, so if we let this next day play out, what is our bias on the daily time frame? Do you have a clear bias or no?
Yes, I would. No, I would say no.
Yeah, I would agree with you. So,
I would expect it to go bearish because we closed bearish, but we didn't close below the.
mhm. So on the daily time frame, this is kind of unclear for me to figure out which direction the market wants to go. So instead of just focusing on the daily time frame, I'm going to go to the 4-hour time frame and see what price is currently doing and seeing what PD arrays price is currently respecting. So this is the middle of London Open, or actually let me go on the 1 minute time frame. I mean not 1 minute, 1 hour, but this is the start of London Open at 2 a.m. Where is price currently trading at? It's trading right next to a 4-hour bearish fair value gap, so we could highlight that. And it also has two bullish fair value gaps trading it right underneath it. So that's something that we really want to pay close attention to. So on the 1 hour time frame, if we let London session completely play out and wait for New York market to open, we'll see something interesting. So red folder news drops at 8:30. Let's go ahead and drop down to the 15-minute time frame just to see how significant that news drop is. So according to the website, that news was bearish just because it was 0.1% lower than the previous forecast or the previous data.
Mhm.
So core CPI was bad, but this one was 0.1% better, and this one also was 0.2% better. So one red floor news was bearish, and the other two were bullish, and you can see the market reflects that by pumping just a little bit. So on the
Very
15-minute time frame, we have a very big bullish 15-minute fair value gap that we could pay attention to. So I'm just going to go ahead and highlight that. Now, if we drop down to the 5-minute time frame, let's see what happens right at market open at 9:30. So it looks like price is currently respecting that zone right now.
Mhm.
Every time it's touched it, it's traded back up. So on the 5-minute time frame, I don't see any sort of entry for an ICT unicorn model.
Mhm.
On the 15-minute time frame, I don't see anything either besides that fair value gap. So
Right.
we're just going to keep letting price play out. So right around
So
here, price
so
trades
if
through
we
it.
oh there we go. Yeah.
Yeah, on the 15-minute time frame, this bearish fair value gap, I mean this bullish fair value gap's been disrespected, but on the 5-minute time frame, there's still just a little bit of room left. So we want to see how price really does move here. Let's drop down to the 1-minute time frame and see. So we have sell side liquidity being swept as price wicks through below this low that was created
Mhm.
during the 950 1010 ICT macro. Let's see if we get any sort of displacement with a candlestick body closure and a fair value gap here. So very weak displacement, but I'm
Mhm.
pretty sure this candlestick's going to leave us a fair value gap inside of our breaker block right there. So we would have entered immediately with a market buy here as price trades into that fair value gap. Stop loss below the breaker block. TP at 2-to-1 risk to reward ratio, which is going to be right here,
Mhm.
which also aligns with this fair
That's
value
aligned.
gap that we could use for exit liquidity. So good trade. Hit stop loss. So this was a losing trade for about 0.5% on my portfolio that day, but everything fit according to our setup. The only thing that could
And
have been better. What were you saying, Paul?
just you think the risk increased because that was a 1 minute time frame?
Yeah, and also because this displacement candle's ass. Like you want to see something like significantly up or down, and we get
Right.
these two. If we had three consecutive white candlesticks all trading through this breaker block, that would be great. That would make me very confident in this trade. But we get these two white candlesticks getting cocked blocked by this little black candlestick, and then this little white candlestick. I mean, this little black candlestick, and then this white candlestick loads above it and gives us a very tiny fair value gap. So
Right.
looking back on it, like this fit our trading plan, but the displacement could have been way better. So this isn't a loser that I'm going to be upset about. It's just a good learning experience for me to kind of just
Right.
maybe not take such crappy displacement trades. So good loser. On to the next. Oops. Okay, Tuesday minus zero point 0.5. Monday plus 3. Okay. Now let's go to Wednesday. I'm just gonna let London play out real quick. Okay, so on the daily time frame, let's start there first. For Wednesday, what is price currently doing? Price has traded through and disrespected this daily bearish fair value gap completely. So if it's letting you know that price is disrespecting bearish PD arrays and creating bullish PD arrays, which direction do you think the market should go here?
Bullish.
That's what I thought too. So let's see what the 4 hour time frame tells us. So 4 hour time frame tells us price is just about to take out this swing high created last week on
Mm-hmm.
Friday. So I'm just going to highlight that real quick. And then we also have a pretty big 1 hour fair value gap here that's about to be, I mean, that's already created, honestly. So we can just use that for reference too. So now we could go ahead, let the market open up at 9:30, and if we look at news too, news for what day is this? Wednesday? Yeah,
Mm-hmm.
news for Wednesday is also not too bearish. So market reacted according to the news, which is good.
What's up, Shanuda?
Hey guys, long time.
What's up, Shanuda?
What's up there? How you been?
Doing good, bro.
Good, good.
So right here we have market open at 9:30. Let's wait for the market to open and see what happens. We want to see it respect our bullish PD arrays in order for us to take some sort of bullish trade. Because we have to remember that we can't trade against our daily bias. We have to find some sort of entry function that aligns with our daily bias. So right over here, what does the market do? Market opens, dumps, trades right inside of this hourly fair value gap, and trades right back up, currently respecting it. So if you drop down to the 1 minute time frame, you can see this stop hunt a little bit more clearly. You have price trading right below this swing low, which is clear manipulation to the downside. So this is the Judas swing. Fake move to the downside before the real move to the upside. Now we need to see displacement to the upside through this breaker block, leaving a fair value gap. So no candle body closure there, but several fair value gaps have been created. So right here, this candlestick gave us a candlestick body closure, and I would have entered right here, place my stop loss below the breaker block, target 2-to-1 restored ratio.
So this is another 1 minute entry, huh?
Mm-hmm. Yeah, for this week I took 3 1 minute entries and then 2 5 minute entries. So as price traded lower here, I bought more contracts to bring my average down so that way I wouldn't have to go for such a high TP. So I'm still targeting 2-to-1 risk-to-reward ratio, but I'm DCAing into this position in order to bring my risk lower and lower. And then, if I remember correctly, price taps right back into re-entry another time inside of this ICT macro from 950 to 1010. So it looks like it's about to run up and hit TP, but then all of a sudden, right here, wicks right back down to entry. So I buy another position there, average down even more. And then right around here is when I take my full position off right before it hits 2R. So in my trading journal, it says I only collected 1.8R, which is still cool with me. And the reason why I took profits early is because this was a 1 minute entry, not a 5 minute entry, so I didn't really have too much confidence in it. And I figured it was so close to TP that I might as well just grab the money anyway.
Right.
So that's another good trade, plus 1.8 for the day here. Now let's move over to Thursday. So far, 2 winners, 1 loser. Not too bad for this week. Okay, Thursday. Before we check the charts, let's check the news first. So 8:30, news folder drops. What do we see? Everything is bearish here. So previous forecast for core retail sales was 0.2%. Now it's 0.4%. 0.4% over here, and then unemployment claims increased by roughly 14,000. So 14,000 more people have no more jobs in the United States. So pretty bearish news. So news is bearish. Let's check the daily time frame. See if the daily time frame is also bearish. Okay. So what do we see here? We see prices currently trading right above this daily fair value gap, and it's also swept the previous daily high. For me, this is kind of confusing because the news is bearish, but the daily time frame Loki says it might be bullish because of this bullish fair value gap. So I drop down to the 4-hour time frame and see which PD arrays are close by that price is currently respecting. So what do we see here? Where would our draw on liquidity be? So right here, I see at 2 a.m. January 16 on Thursday, price trades right into this 4-hour bearish fair value gap, and I refine that even more with a 1-hour bearish fair value gap. So in my head, daily time frame isn't clear, but if I drop down to the 4-hour and 1-hour time frame, I see that price is currently respecting which PD arrays? Bearish PD arrays. So that aligns with my news bias.
You would think if it was going to pump bullish, it would just go blasting straight through that
That-
value gap.
Yeah, you want to see bearish fair value gaps get disrespected if it's bullish. So now that we have our bias, let's look for a lower time frame entry function that aligns with everything that we just talked about. So let's go ahead and wait for the New York market to get close to open. And what do we also have here? So if you look at the overnight lows, we have roughly equal lows, aka sell side liquidity, created right around midnight New York time. So very clean take profit target. I've also highlighted New York's midnight open, and where is price currently trading at? Above New York midnight open. So in order for us to be bearish and have a sell day, we want to enter price with an entry function before price. We want to enter a bearish entry above New York's midnight open for a sell day. And right now, everything's aligning with it perfectly. But I'm also highlighting trendline liquidity as price continues to make failure swings over and over and over again, because price can eventually end up taking all of this liquidity.
Right.
Which it does eventually. I'll show you guys later. But
I remember that day.
yeah.
I thought the same thing. I was like,
Dude, I wanted an entry there so bad, but it happened it happened outside of our time zone, so it was kind of like shit.
yeah, nothing. And it also didn't
Yeah, there was no entry function. It just tapped this 4 hour fair value gap and then immediately pumped up.
Right.
So if we get close to New York Open, let's see what happens. So right over here, these three black candlesticks are creating a breaker block. I want to see manipulation above this black candlestick and then displacement to the downside. And we also have this 5 minute bearish fair value gap. So I want to see price respect this PD array in order to be confident in my trade. So what do we see here? Price is currently trading above this swing high. Trades higher again into this bearish fair value gap. Market's about to open on this next candlestick. We want to see some sort of respect. I'd say that's pretty fucking respectful.
Yeah. Respecting the consequent encroachment.
Yep. Traded into the consequent encroachment, failed to make a candlestick body close above it, only wicks through it.
Displacement down.
Yep. So market opens, instant displacement to the downside. This is exactly a high probability unicorn model setup, so this is very confident for me in order to enter this trade. All we have to do now is wait for this candlestick body to close, wait for some sort of bearish fair value gap to appear here, and then enter immediately as soon as price retraces into the breaker block. So I'll place my stop loss here. What do I target? I target 2-to-1 risk to reward ratio for my first TP, and then for my second TP, I leave 50% of my position for these equal lows. So we enter into our trade here as price wicks.
So this was a 5 minute entry.
Yep. So this candlestick over here, I'm just showing you on the 1 minute time frame because the 5 minute time frame, sometimes these wicks they're not as visible. Yeah. So this wick over here wicks us into our entry, also doing what? It's respecting the consequent encroachment of this bearish fair value gap. So very, very pretty. Exactly what we like to see. And then what happens?
It can.
What were you saying, Paul?
His voice cut off.
Yeah, it can wick the consequent encroachment, but as long as it doesn't close above it.
Yep. As long as you don't see a candlestick body closure above the consequent encroachment, price is still respecting that.
If it closed above that consequent encroachment, our probability of this trade working out is a lot lower.
Yeah, it's shit.
Right.
So we enter into the trade here, and then what happens? Price dumps straight to TP. So very clean trade. This trade took only about like 10 minutes to actually play out, but we offload 50% of our position here at 2R. Now we go for these equal lows for a risk to reward ratio of 3.46. And right now you can see that price already has lots of momentum to the downside, so we want to see price continue to drop. Boom. Very nice. So from start to finish, that was only 30 minutes. So very fast day. Very good day. But now what I'm looking at is I want to see what happens as price starts trading lower and lower into this huge 4 hour fair value gap, just to kind of prepare myself for the next day after this. So equal lows are created here on the 1 hour time frame. If we drop down to the 15-minute time frame or the 5-minute time frame, you can see how clean these failure swings are. This is perfect trendline liquidity right here.
Low resistance liquidity?
Yep, this would be a perfect low resistance liquidity run. So do you guys know the difference between failure swings and successful swings or no?
No, I personally don't.
So a failure swing is basically just price failing to make a higher high. So this is an example of successful swings. You see higher highs and higher lows. Failure swings are basically just the exact opposite. You see lower highs and lower lows. Why is it called a failure swing? Because price is failing to trade above this previous swing high, and making lower lows. So that's why it's a failure swing. Does that kind of make sense?
Yeah.
Cool. So around this time, not around this time, but during this day, I was very interested in potentially trading the A's session just because of how clean this failure swings were and how easy it would be for a take profit target to just blast off and trade through it. So if you guys watch, price is going to react to this 1 hour fair value gap, but unfortunately we don't get some sort of entry function. Why? Because it's not inside of any trading zone that we use. So this is already after market close at New York 4 p.m. But you can see price taps into it and then that shit just runs. So if there was some sort of ICT unicorn model for Asia session, I definitely would have taken some sort of bullish trade, but I don't see anything on the 1 minute or the 5 minute time frame, so I don't take this entry.
Asia
Wow, man, it's
normally
such a bullish day for Asia
doesn't have
market.
shit.
Yeah, super bullish. So now we're on the last trading day for this week, which is Friday. Before we look at the charts, look at the news. There is no news, so what does that mean? It means be careful, be patient, and don't take shitty trade setups because you don't have volatility on your side. So we'll let London play out. We'll wait for New York to open up. Oops, that was too fast. Oh, actually, that's perfect. Okay, so before we look at the lower time frames, establish a higher time frame bias first. What does the daily time frame tell me? It tells me that price is currently trading around equilibrium level, which lets me know that price is trading at fair value. So this doesn't really help me. I see that price has swept the previous daily high. So technically price is supposed to be bullish because price has so far had a candlestick body closure above it. But since I'm not really sure about what price is doing, I drop down to the 4 hour time frame to see which PD arrays price is currently respecting. Price has currently traded into this 4 hour bearish fair value gap and has failed to make a candlestick body closure above it. I drop down to the 1 hour time frame to refine this even more. So as you can see, price is currently trading into this 1 hour fair value gap. Let's drop down to the 5 minute time frame. So as you guys can see, all these failure swings were completely taken out as price trades above it. So I want to see price take out buy side liquidity by trading through this failure swing's extreme high. So what time is it? It's 9 o'clock right here. Let's go ahead and drop down to the 5 minute time frame and look for an entry function. So price is currently traded above the extreme high of this failure swing created during London session. We want to see some sort of lower time frame 5 minute entry function that aligns with our higher time frame bearish bias. Currently price is trading at the 1 hour fair value gap right inside of the consequent encroachment zone.
Mhm.
Trades higher right before 9:30 market open. Trades lower over here. Trades higher again. So almost closes above it, but does not. There's our Judas swing, which is the fake move to the upside for that day. Now we want to see displacement to the downside. There's your displacement. Which time frame is this happening on? The 5 minute time frame. So this is going to give me a lot of confidence compared to the 1 minute time frame. We also have a fair value gap here, a bearish fair value gap inside of a bearish breaker block inside of a higher time frame bearish fair value gap. So very good trade setup for us to take here. Set buy orders as price trades into this breaker block. Stop loss right above the breaker block's high. Take profit where? Plus 2R. What do we see? We see a fair value gap that we could use as exit liquidity right here. So this candlestick wicks us into our entry perfectly and almost hits our take profit, misses it by a couple points, and then This next candlestick over here hits our full take profit perfectly. So another really clean setup. Only took 10 minutes for this whole trade to play out, but very good. And it's really nice to see how respectful price has been to every single PD array that we've outlined this past week. So this is good fucking price action. None of that December bullshit that we were dealing with the past couple of weeks. But so we had plus 3R for Thursday, and then plus 2R Friday. So currently up 8, what is it? 3, 4.8, 7.8. Dude, my math's ass.
So 9.
Yeah. Plus the minus point 0.5 on Tuesday.
Okay, so like 9.3 R total.
8.3.
Oh, okay, yeah.
Oh, yeah, you're right.
Wait,
9.3.
wait, I'm right.
Yeah. my math's ass, bro. My bad.
No, you're good. You're good.
So, not a bad week.
Wait, that's a good week.
Very good week. That's almost 10% in just 1 week of trading. So,
No, to be honest, I was even checking my schedule today. Like, out of all of this semester, my first classes always start around like 1 p.m. So I can easily trade every morning.
perfect.
So I'm gonna sign up on Monday because Monday's gonna be off